Hey folks, Dan Bird here with the Daily Scan for Tuesday, the 28th. A little later in the afternoon, I had lots to do this morning, so it's about 1:35 p.m. On the East Coast. And market continues to go higher, waiting for the Fed meeting tomorrow, which I think is going to be a catalyst for the week. Plus, we have big earnings coming out tomorrow. So tomorrow's going to be a volatile day, I think. Anyway, I am not a financial advisor, so this is for educational purposes only. Let's go look at the 10-minute charts. And I had a subscriber send me an email yesterday, which was very nice. I always love to hear from people, and especially when they ask me to do something a little bit different. So first, he said he calls these the rotation charts. So he loves these rotation charts, but he said he would like to see them on a longer term basis in addition to the 10-minute charts. So I am going to give that a try today. I probably will just do it once a week, probably on Monday. Let me know when you think you guys would like to see it, Monday or Friday. I think Monday might make sense, but we'll see. Anyway, this is today. You can see the market continues to go higher. Little gap up this morning, pull back, close the gap, and now it's starting to move higher. Money flow looks pretty good. Technology is leading the way once again, which you would expect with earnings from the 5 of the Magnificent 7 coming tomorrow. Discretionary is flat and communications is down. So again, technology is leading the way. So let's take a look at this. I'll do this for each of these. I'm going to look at this first on a 7-month basis. So there's what it looks like over 7 months. 7 months takes us back to the April low. So there's what the and let's make it a daily chart instead of a 10-minute chart. All right, so there's what it looks like. See, technology continues to move higher. Discretionary went up and hit the high from back in May, but since then has been moving lower. So that is a negative divergence on discretionary. Communications is the same thing, actually hit a new high in September, and now since then has been moving lower. So that is a negative divergence as well. And let's look at this on a 7-year view. And we'll make this a weekly chart instead. So there's what it looks like over 7 years. So you can see right here, this is the 2022 bear market. This is COVID right back here. So technology continuing to move higher. Only had a little slight downtrend here in 22 during the bear market of 22, but since then has been continuing to go higher. Discretionary, though, continues to go lower. Communications didn't quite make it back to the high from 21, and now is starting to move a little lower as well. So let's look next let's see how this works here. Let's look at there we go, the 10-minute chart. This is for the defensive sectors. You can see right now, today, this is Monday. This vertical line is Monday. Staples, utilities, and real estate, the 3 defensive sectors are definitely moving lower. So that's rotation over into the aggressive, especially technology. And if we look at this on a 7-month daily chart, here's what it looks like over 7 months. You can see the market continues to go higher, but Staples has been heading down. Utilities has been the one bright spot in these defensive sectors, which you kind of would expect because electricity is going to be really important for AI. Utilities actually went a little bit higher than August right here, but it has not made it back to the April highs. And now it's rolling over and heading lower. And real estate has been going down ever since then. And if we look at this on a 7-year basis with a weekly, there's what it looks like going back to the pandemic back here in 21 and the 2022 bear market. You can see what happens in a bear market. The defensive sectors move higher. That's what they typically do. In fact, right here in 21, when the market was hitting new highs, right at the end of 21, these were already starting to move higher. So that was the indication that rotation was, and we're heading into a downtrend because rotation was moving out of aggressive and into defensive. Right now, you can see it's the opposite. Staples is significantly lower, fact, it's the lowest it's been in 7 years. Utilities pretty much flat. Real estate is the lowest it's been as well. So all of this is extremely bullish still. Let's go to the cyclicals. Here's the 10-minute chart for today. Financials, healthcare, all of them are heading lower today. So again, technology is the one area that's holding everything up. If we look at this on a 7-month daily, here's what it looks like. And financials continuing to go down. You can see here's the market up here. Here's the April low. So market financials going down. Healthcare moving lower, but had a little bit of a bump higher right here in the beginning of October. And now it's kind of flat. Industrials is definitely lower, even though it had a nice run back here from May to August. Materials continues to head lower, and energy is down as well. So clearly technology is winning. And let's go to a 7-year weekly. And here's what they look like here. So financials actually, kind of hanging in there. It's been rolling over here in the last few months in 25. Healthcare definitely is down. Industrials is pretty much flat, a little lower than the highs here in 23. Materials definitely going down, and energy down slightly as well. So that's the 7-year view. All right, let's look at the rotation charts. This is growth versus value, etc. For today, growth versus value is moving up, which is good. Discretionary outperforming staples, which is good. Technology and semiconductors. Semis is kind of flat, but technology is moving up. So all of that is positive and bullish. If we look at these on a 7-month daily, we will see that all of this technology, all of this, ever since the April low back here, just continues to go higher. Growth outperforming value, all of this is extremely bullish, and it's not really changing much right now. Discretionary is about to break out. Technology definitely breaking out. Semiconductors and transports is moving opposite the industrials, which is not usually what you want to see in a bullish rally. But that's what's going on. I don't know if that's going to imply something in the future. But overall, everything still looks very bullish. Next one here is that's the breadth. Starting to look pretty good for the S&P. It's rolling over a little bit right now today. Still above 50% though. That's the key. Here's Russell 2000. Today sold off. Looks the opposite of the S&P. So you can see still weaker than the S&P down here. And mid caps and small caps are definitely weaker than the S&P. Now this will be interesting to see what this looks like on a 7-month daily chart. So again, you can see even as this is the Russell 2000, even as it has gone higher, and it actually has outperformed the S&P ever since August, pulling back now a little bit in October though. However, mid caps and small caps pulling back ever since September. So they are definitely implying downside, which you would not think that. I believe this is going to probably turn around after the Fed meeting tomorrow, because lower interest rates should help stocks in this category. So we'll see what happens. Let's look at this on a 7-year weekly. That puts us back to the pandemic, right back here. And you can see it's been underperforming the S&P for quite a while. Ever since the pandemic occurred, and then as we started to pull out of the pandemic, the Russell outperformed the S&P from basically about fourth quarter of 2020 into the first quarter of 21. And then since then, it's just been heading lower. Mid caps and small caps as well. So that actually continues to look pretty weak right now. Even as the Russell moves higher, mid and small caps are moving lower. So this does not really show a lot of strength in the Russell 2000 at this point. So that's the 7-year view. Here's breadth. Breadth is rolling over a little bit, still above 50%. It's below 50% for above 50. This is for the small caps right here. And if we look at the mid caps, oh, this is small caps, sorry. Yeah, this is small caps right here, heading lower. And then finally, the Nasdaq 100 looks really good right now, as you would expect, because we've got lots of big tech cap earnings, big cap tech earnings coming in. The VIX is pretty stable, below 17 still. It's at 16 right now. If we look at this on a 7-month basis, daily chart, it looks pretty strong. Actually, this didn't really change because it's still showing. No, this is 7 months. Yeah, there's the April low right there. So it's still moving higher. Still looks pretty good. And on a 7-year weekly, Nasdaq 100 looks very strong. Ever since this 2022 bear market reversed right here in October, coincidentally, October of 22, and just has gone higher since then. Here's the February sell-off, April low. So right now it's looking very strong as well. And the VIX, you can see what happened to the VIX back here during the pandemic. Here's the pandemic low. Here's the April low right there for the VIX. And right in through here is where the VIX hit a high, but not as high as these two. Interestingly, this was an extended downtrend right here. So the VIX was just continually going up, but it peaked lower than the April low and lower than the pandemic. So that's pretty interesting, I think. All right, let me know what you think about looking at it this way. I'll only do it once a week. I'm not going to do it every day, but let me know if that's something you would like to continue to see. So on the dashboard, of course, S&P 500 is up slightly. Nasdaq 100 is up. The VIX is down. Moving back up right now. It was down below 16 yesterday. Starting to move up a little bit right now. Bonds, the 10-year is below 4%. Gold, we'll look at gold here in a minute. Gold is lower once again today, and crypto, Bitcoin is higher, and Ethereum is higher as well, although Bitcoin is outperforming Ethereum. And then down here we got technology and discretionary, the two leading sectors, with real estate and utilities and staples. These are the three defensive sectors. So they are at the bottom today, which is what you would expect with a bullish market. These are the new highs. You can see Apple, AMD. Apple's reporting this week. CrowdStrike has new highs. Cisco, CVS, Dell. If we look at the breadth market factors right now, large cap growth is the winner for today, and small cap value is the loser for today. They're polar opposites of each other, but you can see very quickly which ones are really doing well. And for earnings, PayPal reported today, actually gapped higher and now has a really huge spinning top candle. Let me show you this chart. There's a spinning top right there, gap up, move all the way up to 79, came all the way down to 73, and now sitting right at 76. That is indecision. So it's trying to make a decision of whether it wants to break out and go higher or whether it reverses and goes lower. But today was earnings, so it looks like they had some pretty good earnings today. They also made some announcements for AI that they're going to incorporate into PayPal as well. Tomorrow, of course, we have Google, the 29th, Meta on the 29th. That's after the close. We have Microsoft after the close, and we have Apple on the 30th, also after the close. So those are going to be the big movers in addition to the Fed coming up. Intel is in the top 10 stocks. The bottom, we have Commvault, Rambus. So all of these are moving down. I noticed when I looked at this, Qubits, IonQ, some of the quantum stocks are moving lower right now. Over here we have Qubits again, Rigetti. Quantum stocks are looking pretty weak, as is DraftKings. So here's what they look like. S&P gapped up again, sitting right near its highs. That's great. Right now it is 10 till 2 East Coast time. So we've got 2 hours left in the day. As I mentioned before, the Russell 2000 looks weaker than the S&P. So it's lower than yesterday. And Bitcoin actually looks like it's making a run higher today, which is great. All right. While we're here, let's take a look real quick at the market carpet. Here's the market carpet for today. You can see NVIDIA, Microsoft, Broadcom, Oracle are in the green. Google is red. Meta is green. Amazon is green. Tesla is dark green. NVIDIA looks great, continuing to move up. NVIDIA usually runs into earnings, which looks like it's starting right now. So all the red is in healthcare. Lilly is down, and also in staples. So Walmart and financials. So most of the green is in those large cap names, which are going to be reporting starting tomorrow. Intel is in the top 10 of this list as well over here. And let's now take a look at see what short squeeze we got today. We've got one short squeeze on the list. This is a pharmaceutical company, Cegon, C-G-O-N. So big volume today. Breakout is it's pretty close to the breakout, probably right here around 45. If it breaks out of 45, then it will shorts will probably start to cover. So that's a short squeeze for today. There was a short squeeze yesterday. Let me show you that one. It was pretty interesting. This one here, RNA, had a short squeeze yesterday, but usually when I see something like this, a huge gap up and then not much movement, especially 2 days in a row, that usually tells me that it's an acquisition. And I looked it up, and yes, this company is being acquired. So that's the reason for that gap up. So all those shorts really got screwed in this case. They definitely have to cover up here, but typically it's just going to stay there and move sideways. It's not going to move much after the announcement of the acquisition. So that's RNA. All right, that's pretty much it for today. Let's go back and see where we are for the S&P. Continuing to move higher. While I'm talking about the S&P and the general market, actually, if we go back and look at the portfolios back here, this is where I have the market timing strategy, and this explains the whole thing. This is for subscribers, but this is a great way to invest your 401k because you can put it in, just basically watch this. It will tell you when to go long and when to go to cash. And the long signal was on May the 5th, and it has not changed since then. No matter what the market has done, it's up 21% since May the 5th. So June, July, August, September, October, November, 6 months, 21% in 6 months, not bad. If you had done the 3X leveraged ETF, like TQQQ or SPXL, the leveraged ones are down here, then you'd be up 65% in 6 months. So this is a very easy, simple way. This gets updated every night. That's what it looks like right now. And it's based on the weekly. The daily will change more quickly. You can see the daily actually went to cash and came back on the 20th. It's up 1.8% since then, but it's up 61% since November of 23, which is the tracking point for both of these. But the daily is going to whipsaw a little bit more. It's really meant for the weekly, the longer term, and those are for those of you that are long-term investors. So if we look at the weekly chart right here, you can see it's green. It's up here above the extreme line. That is a Keltner channel of 2.5. So that's 2.5 times the normal ATR on a weekly chart. That's an area where it may reverse because that's an extreme overbought situation. But it doesn't mean it has to. It doesn't have to reverse. But you can see whenever it gets up there, in these cases back here, remember this is weekly. Right here, it stayed up there for quite a while. Right here, it stayed up here for 2 weeks and then came back, reversion to the mean. Right here, it stayed up here for about a month and a half, and then reversion to the mean. So it could stay up here till the end of the year, really. Right now, it looks really good. This orange arrow is the Turner Capital exit point. Turner Capital is a company that invests using this strategy. I think it's $1 million minimum that you have to give them in order for them to manage this for you. Or you can just follow this and do it yourself. It's pretty much the same. I'm tracking it because I want to see how my strategy does versus Turner strategy. And if we look at the daily one, you can see Turner exited right here at exactly the same time that I did, but I re-entered only, this is a daily chart. So 1, 2, 3 days later, I re-entered based on my rules, but Turner did not get back in until over here. So now it's moving up along with everything else. I went to cash here and then went long again here where they didn't. They stayed in cash through this whole period. So I got out on this big red candle. Again, this following the daily there's more whipsaws. You can see it's in and out right here, in and out right there. Whereas the weekly stayed long from all the way back here in May. It never sold out, just stayed in there the whole time, which is great for a 401k. That's really what you want. You want to keep it in there and then move it out when the whole market is starting to collapse, which is not happening yet. Things are still very bullish, but just wanted to show you that. For our subscribers, it's on the portfolios page right here, along with end of year tax loss harvesting, which I'll do again at the end of this year, and dividend stocks, which I run a scan at the beginning of the year, and then just track these throughout the year. And you can see these dividend stocks down here. This is as of last month. I'll do this again this weekend. I'll update it for October. I expect it to probably be, I don't know, it might actually be higher or flat. But right now, since September, it's up 23% for the year. And that's including the dividends. So these are all dividend paying stocks using the Vanguard high yield and high performance list. So that's what you find here on the portfolios page. But this one here gets updated every day. Just have to look at the strategy. If you're in for the long term, just if it goes to cash, then you're out. And when it goes back to long, you get back in. It's very simple. Can't get any simpler than that. All right, that's it for today. Thanks for watching. Let me know what you think about the longer term rotation charts. If you want me to continue to do that at the beginning of the week, be happy to do that. I think it's interesting, actually. And right now we are continuing to go higher. It looks very bullish. Tomorrow's the Fed meeting, likely to cut another quarter point. So the market will like that, I think. All right, thanks for watching, everyone. Take care, and I'll talk to you tomorrow. Take care.